the khaki store at that
Yeah,
1975, and that's
yeah, yeah,
starting to
yeah.
get some love today. You see how they're starting to pick that up. So
A
it's
little bit of a
maxed down
bounce, yeah.
today, but it's still holding. That matters. So, anyways,
Good. All right, Prof. Thank you.
yeah.
All right, everybody. We have Blake Young that's supposed to be joining us here in a moment, but he is okay, yeah, he just sent me a message. He's jumping over directly from the futures room. So it's gonna be a duo of Blake Young and myself today. Appreciate you guys all tuning in. Today is Tuesday, the 14th day of Out of This World, October 2025. We're seeing a little bit of sell side activity, obviously, in the tape today. But I'm going to get Blake's take on this too. And we're going to be talking about where we see this market going. I'm kind of in the camp that we're just kind of flushing out the rest of the volatility here. A bit of a different stance than some of my esteemed colleagues, but that's okay because this is what makes a market, guys. This is what makes a market, and I think a big part of it too is different time frames. We all have different time frames, and it's important to understand that when you are looking at markets and looking at positions and trying to align yourself with how another trader is looking at the market, make sure that you're looking at it from a similar time frame as well, right? So a day trader and a swing trader aren't necessarily going to look at the market in the same manner, and that's so very important to understand, because you can be short-term bearish, long-term bullish, and that type of differentiation makes a big difference and can have a large impact on your bottom line and your success taking on a trade. So that's how I wanted to start off today, as Blake Young comes in to this meeting here with all of us today, Mr. 10% himself.
Hey there.
Do you
Sorry, I
have
had to
my
jump out
nickname
of
for you?
the 10% to the futures and just back to back. So sorry for the
Yes.
slight
No, it's
delay.
good. It's good. I just did a little bit of an intro talking about, like, I think one of the big reasons there are a lot of disagreements in the trading community is that we all are trading on different time frames. Like, you can be short-term bearish, long-term bullish, intermediate term bullish, short-term
Right.
bearish. And so, before people say, "Oh, you're an idiot because you got this wrong or this or that," like, well, what time frame are we talking about here?
Hey, I'm an idiot for a lot of reasons, but not, yeah, that you can't say I'm an idiot for something that we don't aren't on the same page.
Right. No, yeah, that's my point. Is like, if you're looking for, a 2 week pullback, what is that going to do in the grand scheme of the longer term trend? Well, it depends how much you drop, but odds are, probably not that much. Now
Right.
you start taking out some key lows, then okay, then you're starting to shift the long term trend. But again, that's the point I wanted to start with today. So, great. Well, what's happening in the world of Mr. 10%?
You know, it's kind of weird. I was going to see if, I don't think you look at the super intraday stuff as much, but I was noticing we did this before, and I was trying to remember if it was last year or 2 years ago, about in August through the end of the year. We had a majority of our movement in the markets, and I'm talking about all the markets, whether we're talking about the currencies or we're talking about the indexes that were happening in the overnight. And the
Yeah.
question is, we're seeing 60-70% of the day's range happening in the overnight and not in
Yeah.
the regular trading hours. And so when that happens, we get into these where we start the day and we just go into, finish off to some knee-jerk reaction. We've already done this bar, we kind of this much more, and then we just hold. And we sit there and holding flat. And the volume and that is going into that, we just dry up in the regular trading hours. So my question is, what do you do to manage that when it goes into almost all of your price actions happening overnight? Do you change your behavior in the daily because then you're talking long term, you're going to ignore that, or is it creating gaps in your trading? Have you noticed the same thing? I guess that's really the first question. Have you noticed that
Yeah,
most of
yeah,
the
I
action's
have.
been
I
happening
have
overnight?
noticed that. I have
It's
noticed that. I guess it doesn't affect me as much as it would affect someone like you. I
mhm.
guess the solution for you is you got to start doing 10% after 10 p.m.
Yeah, well, and it's or we wait until wait until it breaks free again, because there has a
Yeah,
tendency to break free after 1 or 2 in the afternoon. But um, Yeah, it's that or trade in the middle of the night. And we actually had a higher volume in gold in the overnight trading than we
Yeah,
did in regular trading hours.
yeah, yeah. Yeah, gold's definitely a global phenomenon taking place right
Yeah.
now. And when I say that, I mean like it's not like this is bigger than just gold being priced in dollars hitting a new
Mhm.
all-time high. This is a fundamental shift in, I think, how central banks and governments are valuing gold due to their issues on the debt front. I do almost see this moving gold as like kind of governments throwing in the towel. I mean, you heard all those years about gold bugs saying, "Oh, governments and central banks are artificially keeping down the price of gold because yada yada yada." Well, that's clearly not the playbook anymore.
Right.
Even if that was the
If it
case.
was.
Yeah, if it was, but it's clearly not the playbook anymore. And is this part of a greater attempt for some sort of revaluation of reserves to kind of free up some more, working capital, um, you know, in the event of a soft default, because they're not going to come out and say, "Oh, sorry guys, we're not paying our bonds and you're not getting your social security checks, next month." Like they're not going to do that. So I think this is part of what ties into that. And I'm curious if you see it similarly or just something related to inflation.
Well, I think the primary is always going to be inflation. And when you have multiple countries saying, oh, we're slowing down, we've got to stimulate the markets.
Yeah.
I mean, the Keynesian methodology is used. There's no one that's not doing it anymore. I mean, India used to have, surprisingly, the largest reserves. I mean, we didn't really, no one said, oh, I'm safe in the rupee. But reality was they were the highest gold reserves per uh, based off their debt of any country. And they
Oh,
liquidated that years ago. They just pushed all the gold out into the market.
yeah.
And the value just wasn't there for them to hang on to it. And so I don't think I know, and yes, people are trying this model where they were rushing into crypto as an alternative to that. And we tried SDRs. It's always this game of saying, how can we distance ourselves from the dollar? But you can't when you're talking about we're the global consumer.
Yeah.
And I think that's the reason why, gold is going to rise here, but it's global inflation. And in the end, the dollar, until we stop being the consumer of all things, the dollar does not uh, leave as the primary currency.
So
So
you made me think of something because you said something very profound there, and I don't even know if you intentionally did, but
it probably was totally intended then.
but like, okay, so we are the global consumer.
Yes.
What would actually cause America to stop being the global consumer? What would actually change consumer spending patterns? And I would argue it's inflation.
Well, I'd say inflation and recession and maybe depression.
Yeah.
It's pain. One way or the other, it's a pain, some sort of pain point where, because deflation or disinflation does not help the consumer, because it doesn't mean that none of us are sitting on cash, right? As far as consumers are concerned, we don't have piles of cash that we've been waiting to spend. And so disinflation doesn't, or deflation doesn't help your purchasing power. So deflation would hurt the consumer, disinflation would hurt the consumer, inflation would hurt the consumer because of where we're at. And basically, if we don't have a balance in the 2.5%, 3% like they say they target, then the consumer gets crushed. It's the reason
Yeah.
why I've been calling for shorts in the leisure sector and shorts and in the consumer discretionary, because I think we are tapped out and we're seeing defaults increase and autos are being repossessed, and so I think we're getting close there. But if you're talking about when the dollar wouldn't be, we're talking about US having a deep enough depression that we reset the way we believe, the way we live day to day. I mean, that'd be a massive, massive shift in, well, something we haven't seen in literally 100 years.
Yeah.
We're talking depression era type of behavior.
Yeah. Well, I mean, there is a reason why during the Great Depression they confiscated the gold and silver, right?
Yeah, they have a tendency to do that when it's when that's where the real store of value is.
Yeah. Yeah, so that's pretty remarkable. So I normally start off my sessions looking at currencies.
Mm-hmm.
And I know you spend a lot of time looking at that. So really interesting price action, I think, here in the currency market. Do you think the dollar could be topping out once again here?
That's, like to compare it against numerous things. Obviously, the euro US dollar is the primary. And
Yeah.
so that drives the dollar index 55% of that. So I'm looking at this and say, do I really think this is a bottom for the euro US dollar versus a top for the dollar index?
Yeah.
And so I look at this chart and it just doesn't, it's not convincing to me that this is a bottom. It looks like the beginning of a strengthening of the dollar, if anything, and a weakness of the euro. Now, I don't know if it'll go much further than where you got your cursor there, because an
Yeah.
ascending triangle doesn't mean it reverses the entire ascending triangle. It usually just goes back to the midline. So
Yeah. Well, I think this is the line in the sand here. Is like
yeah.
you take out that low from late July, early August, then it's going to be a pretty rough time for the dollar bulls. But
Mhm.
there's a lot of people making bets on a dollar rebound,
Yeah,
and
I mean, I think pricing the break of that support level feels good. I don't know if it's
yeah,
going to play out,
yeah.
but it does.
Well, my whole thing is I think that this administration is kind of getting their way on things for now, and they're gonna get their way until they don't, until the market basically says like you can't push this any longer. I mean, the playbook is kind of right now weaker dollar, lower rates, and then what happens if inflation comes back? I think they're able to do this because oil prices are down.
Right.
Um, but as soon as you see oil prices come back and inflationary pressures increase, I mean, again, it comes down to like, would you rather get like, okay, let's assume that interest rates go down further from here. Would you
Mhm.
rather get, 3% on a 10-year US Treasury or 1.5% on a 10-year, euro denominated, bond? And I think the answer is people are going to want those dollars. So I think we're
Mhm.
getting away with it for now, but inflation really is the Achilles heel of this whole situation. That's at least how I see it.
Well, then you add to the fact that inflation is high, hot, and I know we won't even have to worry about talking about those tariffs right now, but um, we know tariffs are
Taco
inflationary.
Tuesday.
Yeah, exactly. It's always Taco Tuesday. So we don't need to worry about that right now as far as the tariffs adding that inflation. The issue or concern that I have is, like you said, with oil prices being low, how high is inflation really?
Oh, that's the scary part.
Yeah.
Is that it's lingering and oil prices are like oil prices have been slammed for what? 3, 4 years now, Blake? And
Mhm.
you still have lingering inflation. I mean, in any other economic environment where you're down going on 4 years, like it'll be 4 years
Right.
in March when we peaked in oil. I mean, yeah, there's been I always say like inflation's there, but it hasn't been accelerating, but it's still there. It's not,
Mhm.
10% per year, but it's still, around 2.5, 3% per year.
Right.
So yeah, I mean, this is what is scary to me is once this thing bottoms, I think, Pandora's box is opened and we're gonna have a whole can of worms that's not gonna be that's what I think is gonna cause some
And
issues
you got
with
some
this.
mixed metaphors there.
Yeah, I know. I know because it's gonna
Pandora's
be
box is it has a can full of worms in them. Yes.
yeah. So it's an issue. It's an
Yeah,
issue.
it's a huge issue. And whether or not just because it's priced in the US dollars, whether this pulling back is temporarily strengthening the dollar in crude terms does
Yeah.
not mean that inflation is still not there. Oil has a lot bigger impact than just retail gas prices and to
Yeah.
inflation.
Yeah.
And so the fact that we're still in the 2.5, 3% inflation range when we're off the highs from 80 all the way down to 58, that is massive. The
Yeah.
fact that inflation is still high, like you said, one little bounce here.
Yeah.
If we've kept this to 3%, we go all the way up to 10. And keep in mind when we go, and this is for everybody, when we have inflationary pressure, and this is when we have a chart goes like this, and you say, I've increased it 10%, we just suck all the savings out of everybody.
Yeah.
And then if we go at 2%, we're still 2% up here, right? So we're just rounding out a little bit, but we've already spiked up. It's like we've cleared orbit on the initial launch. And now it's easier to escape the Earth's gravitational pull if we're already out into orbit. That's
Well,
my concern.
yeah.
It could be
Yeah.
huge.
Well, one of the things I've been discussing too is I think this is kind of like the saving grace for the consumer near term because, I remind people like, okay, we're all here in TheoTrade. We're kind of like in our trading bubble, if you will. But the average American
Mhm.
consumer, if gas prices drop below $2 a gallon on average, they're going to
Mhm.
spend that difference and use that difference to deleverage, use that difference to try and play catch up a little bit.
Yeah.
They're not necessarily going to be investing that difference. So if anything, that could keep the consumer, going a little bit here near term. But Mari is asking a really good question for the bigger picture. I do want to voice it so I can get your take on it too. Is if we continue to impose tariffs, and if there's an alternative trading partner for most of those countries, could there be an argument for diminishing demand for dollars? Would a
It could
cheaper
be.
dollar help us pay a cheaper debt and eventually make us a bigger exporter?
Well, a lower demand for the dollar does not make it a stronger dollar.
Right, it makes it weaker, but it
Yeah.
does help us export more, and it does help us kind of service the debt. I'm not going
Right.
to say paying it off. It's just servicing.
Yeah. So the weaker dollar does make it easier to pay back our debt, but the weaker dollar also means that you have to assume that we're going to have bigger exports. Do you really think we're going to go from a negative 65, $70 billion a month net deficit to positive?
Yeah, that's bringing the robots, right?
Yeah, well, that's the question. Is it going to be? It's always tech and has been for
Yeah.
decades. But so when we talk about exports, we are actually not exporting items. Do we need to actually increase do they increase the price of those things to offset the inflation? Or do they say, oh, dollar's
Well,
cheap,
that's
so
the thing.
therefore
That's the
we'll
thing.
sell
Is
all of our
like,
technology for cheap?
yeah. Well, it's like a big reason why when people are like, oh, tariffs are automatically inflationary. I was like, guys, you're looking at like one part when this is like a 10-part system
Mhm.
that actually, will lead to inflation. But I think the bigger story on the dollar is, when the dollar gets too strong, don't forget that all these countries, they still issue debt in dollars. So like you can have,
Mhm.
Taiwan, for example, they can go out and issue a bond denominated in dollars, and they like when the dollar gets weaker.
Mhm.
They like when the dollar gets weaker because then they lent money to the world, whoever bought their bonds, and then their economy still operates in their local currency. So in a way, I explained this the other day how, if you have a currency that's dropping, that liability in a way is kind of canceling itself out as a liability because you have to pay it back with cheaper currency that you issued that loan in.
Yeah.
So when the world issues dollar denominated debt, they want to see the dollar go down. It's when the dollar goes up that they feel the pinch. So in a way, the only people that lose with a weaker dollar is the American public because then we have to pay more from goods overseas, right?
Yeah. And we're an importer. We import
Right.
everything.
Right.
So
Right. And then the exporters say, "Oh, well, why aren't your people buying stuff?" Well, I mean, we what are we just supposed to spend everything forever and just keep borrowing until we, can't anymore? I guess that's what they want us to do.
right. And so then they have to weaken their currency to get it to be able to buy it. So we
Yeah.
have more value. So it becomes this nasty cycle. Now, I do think tariffs are inflationary because what we've already seen it. I've actually talked to people with the boots on the ground. I used to do, I don't know if you knew that, Gianni, I used to be an
Oh
importer.
yeah.
I
Yeah. Yeah.
jokingly
Yeah.
say import exporter because I did export once. We exported potash twice, actually. So, but we exported one item. Um, but yeah, so I'm an importer exporter, as Art Vandelay would say. But I still have people in the field, and they said, yeah, we ate most of it. We can't keep doing it.
Yeah, for now. Yeah,
We're
they can't
they
keep doing
ate
it for now. Yeah.
most. They said we ate most of it, and we are losing now. And so they're not real thrilled, and they because now they have to raise prices. It
Yeah.
is the importer. It is the company that's buying the stuff overseas that has kept it from being a lot worse than it was. And so when that comes, when the chickens come home to roost, the fact is the importers and the producers that are adding to it here will have to not, they can't eat the cost all the time. So at some point they're going to have to raise
100%.
their prices, and that's when the inflation kicks in.
So what has to, like, in theory, what would have to happen for them to not raise prices? I mean, either one, the tariffs go away.
Mhm.
I guess two, in theory, if they saw massive tax relief and kept more after taxes or regulatory relief.
Yeah.
But yeah, at some point, like there is going to be a little bit of inflation. But here's the catch too, Blake, is like the administration is not really saying this, but they actually need a little bit of inflation. like again for this whole debt situation,
Yeah.
the catch I think is they need to keep rates low, but run inflation kind of above rates. That is kind of like the secret recipe that they're not. They're telling you most of their playbook, but I don't think they're telling you all of their playbook. I think they actually do need a little bit of inflation.
Well, that's the question is when does default really come on the table? As I talked to my friend with this the other day, are you concerned about betting on U.S. bonds?
Like on the bull side or on the bear side?
Both side buying them. Are you concerned about buying bonds?
I think no, I think bonds will somehow make their way higher. Yeah.
So if bonds are going to make their way higher, then default risk is less likely because all they do is issue more
Yeah.
debt.
Yeah.
So as long as
Right.
there's demand for the bonds,
Yeah.
the default risk is near zero.
Yeah.
And no matter what we say is no matter how stretched we are, no matter what we can go any number of routes with this, but the fact is that I don't see that as a viable risk. I don't see that as a significant concern in the current environment in the market. I don't see us going into default. And as long as there's demand for bonds. So that's one thing. Watch for a massive sell-off in bonds because that means we're not going to be able to get the money we need, and we're going to get it at higher and higher rates if that happens.
Yeah.
And I still blame Janet Yellen for not reissuing our debt.
You mean Janet Yellen?
Janet Yellen, as you like to say.
Yeah,
Yeah.
Janet Yellen.
So
Yeah,
we're
I mean,
ripping higher right now. What do you
yeah.
think? What
What in
what do you think is
stocks?
causing that? Yeah, equities are breaking out, ripping higher. NASDAQ is
Because
high
it's
of
Taco
day.
Tuesday, Blake.
It's always Taco Tuesday though.
Yeah, it's Taco Tuesday. I mean, that's really all it comes down to. You know, actually, I'm going to be having tacos for lunch today, believe it or not.
Just in honor of the
In,
all of
in
it.
honor of Taco Tuesday. No, like so what I'll do either like on Sunday or Monday, like I'll grill a bunch of meat so that you know you can warm them up for like a day or two, you know.
Mm-hmm.
And so I actually believe it or not, like I'm not stingy when it comes to food, right? At all. Like I'll pay whatever I need for the quality. That's just, you know, what one thing I learned growing up. But the thing is that I was a big Chipotle fan for a long time.
I thought you said you paid for quality.
Well, that's the thing, Blake. The quality of Chipotle has gone down significantly
It
over the
has.
last 5 years or so, and the prices go up. And I told my wife, like, I was like, listen, I'm not paying $80 to have two Chipotle burritos, like a large thing of chips, and have it delivered to my house. Like, no. So she started making homemade burritos. I grill the
Mm-hmm.
meat. She makes the burritos, and let me tell
Uh-huh.
you, I mean, it
Much better.
is much better. And
Yeah.
a lot less expensive and a lot tastier. And yeah, it's too bad because you know it's one of those things. Like I like to get carry out, even though like you know, so we don't have to cook every once in a while. You know what I mean? But I just can't justify eighty
Well,
dollars for two.
let's talk about that. Let's get into Starbucks. Let's get into Chipotle. Let's deal with some of these small groups that are
Yeah,
doing the Grubhub and everything else. Let's talk about the trades here. And you can already see Starbucks has gone from 117 all the way down. I mean, we're at
yeah,
87, but it did drop down to 75. It cut itself down by 30 some percent. So
yeah,
as we're looking at this, if whether we're talking inflation or we're talking about the consumers losing jobs, because we know that's a reality. If we're talking about any of this stuff, what happens? We stop going to Starbucks. We stop going to Dutch Bros. We start making burritos at home. So do you think that this downtrend is anywhere near finished other than being at a low point for the last 3 years?
Well, you know, I do think Starbucks, I'm just gonna be upfront. I think they have a big branding issue. You know,
Mm-hmm.
back like for example, when I was in college, I spent a lot of time at Starbucks studying. You know, that was like my go-to like coffee shop.
Mm-hmm.
Their coffee is not good.
No.
I don't know that it was ever really good. I think it was just me wanting to be in a coffee shop and, you know, I guess studying. But I don't know. Like I always remember Starbucks kind of trying to have like the appearance of like a higher end, like I don't want to say like luxury, but like maybe like one step down, like
Mm-hmm.
the environment. But like I don't see them like that. I don't think a lot of people see them like that anymore. So I think they have a brand and identity crisis going on, and it's causing some issues. Obviously, tariffs on coffee are creating some problems.
Mm-hmm.
But yeah, I don't like Starbucks anymore. It's been years since I've been there. But I was like frequenting Starbucks like back in this time, and the
Mhm.
stock was in a bull market. And so it's because I stopped going there that the stock topped out and is now
It's
dropping.
there you go. So if it breaks through that low though,
It's toast. I mean, they
yeah.
might, yeah, who knows what's gonna happen.
I don't look I'm not looking at that low as a defensive play that I would want to step in yet. I look at that as saying if it breaks through that low,
It's toast.
yeah, the consumer wasn't tapped when it came back to those lows before. So it's
No.
coming back to the
No.
lows where the consumer
Yeah.
wasn't struggling. If it
Well,
breaks
I
through
don't
that
know.
low while the
2022, Blake. 2022.
yeah,
That was a tough time for consumers.
well, but look at 2020.
Oh, I mean, you got all your stimmies.
Yeah.
This was the stimmy rally. And that was the
Well,
top.
yeah. So there's consumers not getting bailed out here. If we
No.
break through the low, Starbucks falls and
Yeah.
falls dramatically. And I think
Yeah.
there's
I
an
don't like
opportunity way,
Starbucks.
way lower.
Yeah.
You could throw in Bros in there, Dutch Bros, much smaller market cap.
Yeah.
And it's the same thing. We're selling these off into their multi-year support levels and saying this is where the consumers tapped out and they're not going to be spending $7 for a frappa mocha caramel yachty, whatever you're going to put into your drink. The fact
Just
is
don't
they,
have cappuccino after lunch, Blake.
okay, I won't.
Because you're not allowed.
Okay, fair enough. I know it's an Italian thing. So let's take a look at, well, before we leave this, I was going to go to back to Starbucks really quickly and highlight something else. You talked about the brand. They weren't on brand. The fact is Starbucks did say, yeah, we're the good stuff, right?
Yeah.
We're better than our competitor, whether premier or not. We still took the statement of we're better than them. That's kind of the concept I'd say
Yeah.
you're playing in there.
Yeah.
Well, you look at something like this, and Starbucks did get to the point where they are saying, hey, we are the default. And to make it the exact same, it's the idea of going to McDonald's. You don't care, going to McDonald's thinking, I've got a good burger here.
Right. It's just
No,
like just a standard burger.
I know I get the exact same thing. It's not even a standard burger. I get the exact same thing. I know
Yeah.
anywhere I go in the United States, I know exactly what I'm going to get, what's going to come out of that as far as setting that up every single time. Starbucks does the same thing by burning their coffee. It's a consistent outcome.
Yeah.
Hey,
Yeah. Well,
I'm
no, I like that. Well, did Dunkin', no, are they publicly traded anymore? Dunkin'
I don't know if
Donuts.
they are.
Oh no,
I
because I was
don't know if
thinking
they
of
are.
Krispy Kreme, DNUT, DNUT. Yeah, this one's been destroyed. I mean, wow, that looks terrible. Honestly, Bros is kind of like hanging on life support here in
Uh-huh.
this like 45, $50 zone. But I remember like back even like in the 2010s, Chipotle was a very hot stock.
Uh-huh.
Did very well, and it's been absolutely destroyed recently and again because it's same idea.
They
Blake
did
is like
better when they had Listeria.
no, but it's that's the thing. It's unironically that's not a word. It's ironically true because Chipotle, similar to Starbucks, their whole thing was, hey, we use quality, we use better ingredients,
Yeah.
right? And you might pay a little bit more, but that's it's supposed to be fresh food. Well, they stopped using that. Okay, they stopped with the good ingredients. They jacked up the prices.
Mm-hmm.
I mean, that was their brand. They destroyed their brand. Maybe it was to temporarily appease Wall Street shareholders, but it comes at a cost. It comes at a cost. Now Chipotle's hanging out on support here, like around 38, $40, from way back when. But I don't know. It's one of those things like does it automatically mean it goes back to its all-time highs and continues higher from there? I'm not so sure. I will say this gap down here, I don't want to touch this stock as long as it's below that gap. That's a brutal,
Mm-hmm.
nasty, morbid gap. That's really bad.
Well, and I go back to anytime you deal with inflation, you need to also talk about substitution.
Yeah.
And the fact is, we substitute at home, we substitute at mom and pop shop as far as Mexican
Yeah.
food. And I don't know about you, but I've got probably 10 different mom and pop shops that I'd rather frequent anyway.
Yeah.
Because they're better food and I like supporting local. So I do think the substitution starts shifting over, and you say, well, why would I spend $10 for a burrito? Wait, no, I can do the same burrito or bigger for $5 at a local shop. And so you do get the substitution, you move away from it. And like I said, that gap, I agree, that gap is danger zone.
Devastating.
Yeah.
Devastating. Yeah. And I mean, who is like, is there even really a publicly traded competitor to Chipotle? I mean, obviously Qdoba exists, but I don't think they're publicly traded.
No, they're not. The one we have local is not either.
I mean, Yum Brands owns Taco Bell, but
I was going to say Taco Bell, but that's not the same game.
No.
Yeah.
I mean, Yum Brands actually doesn't look that bad.
Well, and it's because like McDonald's, you know what you get.
Yeah.
We're not trying to pretend that we're high quality, and we're not high expense. Our menu is acceptable, and we can manage it even during tough times. And so I don't think that we're seeing this kind of a sell-off scenario in the same vein that we're talking about in the other.
Speaking of low quality, low cost stuff, when I was in high school, like after school, I'd run and grab like a McChicken or two. They were like $1.29. They run like $5 now, Blake.
You kidding?
Yeah, I mean, I haven't been to McDonald's probably since like 2012. I'm not gonna lie, but like a McChicken for $5. I mean, that's I mean,
it's
you
can now go to fast food for $15, which once was a $5 value menu, right? So we're three times the cost.
Yeah.
Pretty universally 3 times the cost. So I think you bet against these ones that are the higher end because they're higher cost, and the fact is people are going to substitute out and change what they're doing.
Yeah, absolutely. I mean, like, because the thing is, like, what are you actually getting from Starbucks again, aside from burnt coffee and like not even that like not even nice inside anymore. Like the stuff's old. It just seems like run down. The employees aren't engaged, honestly. I mean, here in Michigan, I go to Big Big Coffee. I like Big Big Coffee. And then there's like some local coffee shops like My Family's I'll stop into every once in a while. But yeah, I mean, Starbucks, not for me.
Yeah. So like I said, I think you just look for those types of brands. And what about Panera?
Is that they used to be publicly traded?
Are they not anymore? Ever since
No, I think no, yeah, they've been
since Newsom destroyed all the small mom and pops in California and padded the counts for his Panera Bread friends and his own ownership.
Panera they went they were public, but they got taken over by PE.
Yeah, that's right. I forgot that. Let's see. Who else can we look at in this area? And I don't want to be completely bearish, but I kind of do. If we're talking about consumers, I do think we'll see substitutions, and it's going to put the pressure on.
I see. I'm doing a screen here on food products to see what we can we can find. But these might just be like I should probably do restaurants. 1 second. Restaurants is probably a better screen. Yeah, restaurants and bars. Let's see what I got here. It's not a very strongly screening sector. Potbelly.
No.
Here's one.
Ooh.
I've actually never been there. It looks like they got bought out.
That's the first time I had it was in Chicago.
Yeah, I've never had Potbelly, but looks like they got bought out. Usually when you see this big move and it goes sideways like that.
Consolidation of those companies.
Dine Brands. Who does this company own? I'm not sure. Looks like
they also have a. Oh, he just switched.
But look at how weak the stock's been too. I mean, a lot of these restaurants very weak. Papa John's. Another stock trying to come out of a bear market. Bear trend for a couple of years. So yeah, the restaurant and food industry, Wall Street, Cheesecake Factory. I've never been there either. Have you, Blake?
I've been there. It's they call it the overwhelming menu. There's like 23 pages.
Oh, really? Wow.
Yeah. So it's, which I don't know why they do that, because they've shown that is not good. Consumers don't handle that well, but
yeah,
too many choices is not ideal. What about Darden?
Oh, what's the ticker on that? Oh, Darden Restaurants, DRI. There you go. Yeah, this is isn't this like Olive Garden and then yeah.
Texas
even
Longhorn or Longhorn Steakhouse, things like that.
they got a nasty drop there.
Yeah.
I don't
So
like
I mean,
that
this
either. Yeah.
cake equals paradox of choice. Yes, it's true. So, and
Yeah,
again, people eat.
God.
KKTC says eat,
Oh,
which is
Brinkler, yeah,
Chili's.
Brinkler.
Yeah.
Yeah.
So all of these, I think, are opportunities. The trend is down. We have a gap that's not going to fill. We've got lower highs, lower lows, and we're at a major low. Every one of these is an opportunity, I think, to
Yeah.
start looking at bearish. And it ties back into what I talked about last Thursday, leisure and travel. These are the ones that are going to get woes. Now, one of the other things that we're looking at the idea that, not only did we know that the crypto world, the crypto influencers, the crypto bros, the Lambros, and everybody else out there got squoze really hard. Anyone trading the leverage got really squeezed. Anyway, so whatever happened, they lost money, a lot of it. And so they're probably not going to run back in. Now, this ties to the next step, which I'm going to say combines both things. Where is the next area that people are over leveraged and inexperienced or untrained? Because I'm going to say that with crypto.
I mean, you could argue probably AI, but
Well, and I'm saying that people they're leveraged and own directly because they own their wallet, right? What about Airbnb?
oh yeah,
What
like
about
just the Airbnb, like
all those
become like
people,
a
influencers? You should buy 15 homes like I did, and then you should go leverage them up to the hilt. What
yeah.
happens when we stop traveling? What happens to these over leveraged people that are inexperienced in knowing how to manage properties and that it just worked for them for the time being? I think you're going to see a major correction in Airbnb. I think you're going to see less travel that way, less Airbnb stays. I think you're going to see the home sector possibly see an influx of single family homes because those Airbnb people will start liquidating.
Yeah, unless I have to, out of principle, I don't like staying in Airbnbs when I travel. So yeah, I get it. I want when I go somewhere, I want my bed made, I want my room cleaned. For me, that's part
Yeah,
of
it's
like
only
not
if we're
being
going
home.
with the whole family because I've got adult kids, right? So it's only if when we're
Sure.
going with the whole family that we do that. Otherwise, yeah, if it's just me and my wife, it's always no, I'll take something that I know has been cleaned,
Yeah.
and
Yeah.
I don't need to worry about all the other stuff and the secret hidden fees. Those are always fun.
Yeah.
But I do think this is an area that I would bet against too. Not just hotels, but Airbnb. And I
Yeah.
think, yeah, the little bounce today, that doesn't still in a downtrend the way I see it.
Oh yeah, absolutely. Lower lows and lower highs, nothing to get excited about just yet. Especially to me, this just seems like it's been consolidating its losses for the last few years. So, but yeah, it's funny because I still have my restaurant screen up here, and this is like one of the weakest sectors when it comes to momentum. I mentioned that AI thing too. The difference with AI and crypto, I mean, you compare the two. I mean, there's a lot more institutional involvement on the AI side compared to crypto. I mean, crypto's is growing, but it's become like a cult identity with crypto, which is what I always rag on. I'm the resident crypto bull, right? But like I've
Right.
always said, okay, like I could care less whether Bitcoin went to 1 million or went to zero. To me, that's irrelevant. It's a trading vehicle, and we're going to treat it like that. But I mean, even I'm looking like at BJ's wholesale, which is kind of like call it like a knockoff Costco, if you will. I mean, even this has been struggling some. I
Yeah.
mean, stock's done pretty
Well,
well, but it's been cut pretty significantly.
and I have a lot of family members that work at Costco. And so
Yeah,
one of the things that I pointed out before, Costco has been adapting. They put more food items in the main blocks
yeah,
than their high ticket items. So they're adapting and they're saying, hey, consumers are struggling. We're going to draw to their attention the daily stuff instead of the high ticket items over here and this cool little
yeah.
gadget over here. They're putting food items there. And so
Sure.
these companies that aren't adapting to that aren't putting the things that are lower, cheaper, and more affordable and core to what we need are the ones that are not going to be doing as well.
Yeah. Well, that is the big paradox for I guess the 90% of the consumers out there.
Mhm.
So that's if you know your customer.
Yeah. And if you can adapt. I mean, obviously there's small places that can't, or very niche places that aren't really going to adapt very well. But absolutely, there's some things you need to take into consideration. And you look at companies like Walmart, bounce back right back up, and Costco and Kroger all up huge today. And these are the ones that I want to be buying into. And I've been talking about Kroger, Costco, and Walmart for how long now? These
Yeah,
are the
Walmart actually
places
looks
I'm
really
looking for the
strong.
bounce. Yeah.
Walmart
How do you
looks
like
like it's
that?
about to go to 120. This is a beautiful cup and handle here. I mean,
Yep.
look at that. There's a cup. There's your handle. If I can unclick that. Come on.
Your little teacup right there.
Yeah, that looks actually really strong. Walmart kind of does its own thing. Talk about like an uncorrelated stock. Like obviously it blew up in April with everything
Mhm.
else, but I've seen it, weather storms very well compared to some of its peers. But just talk about a stock to create wealth. I mean, just really remarkable what this company has done. How's Kroger doing? That's where I do a lot of my shopping.
Yeah, Kroger, for those of you that are back east, this is your Harris Teeter, your Fred Meyers, your Smiths, I mean, they have lots of different brand names. They're all under the Kroger umbrella.
Yeah. Did they
But
ever buy Albertsons or did that get struck down? I
no,
think it got struck down.
Albertsons got struck down. It was
Look at that. Big
yeah.
earnings gap there. It actually doesn't look all that bad. Someone in chat, I don't know if you know this, Blake. I don't know if this is true. I'm asking.
Hmm,
Someone says Tom Sosnoff owns a coffee shop called Bad Coffee.
I don't know. I know some fun stories about little restaurants and cafes that he's bought in the past. He has a hilarious one about tuna fish.
Like a sandwich place or like
Yeah, he had
pet food?
a little deli, a little sandwich place. And so, they bought into it and they're looking at the recipe and they were going through and they made this stuff and they made the tuna salad, and it was vile and they're all like gagging and grossed out. And so it's supposed to be 4 cans of tuna to one ratio of mayo. They swapped those.
Oh,
So it was
oh,
tuna flavored mayo sandwiches.
oh man.
So
That's
yeah, I don't know about
brutal.
the coffee shop, but maybe that's hilarious if it's bad coffee.
Wow.
Tuna flavored
Well,
mayo.
let me ask you this. What aside from, Walmart and Kroger and some of those, is there anything else any other bright spots you see in this market?
That I think are bullish.
Yeah.
Um, you know, really, that's the only safety I'm finding. Now, I do think there's stuff in industrial space, like you could look at things like Deere and Caterpillar for some opportunities there. I don't think we're done in the industrial space yet. So we could take a look at CAT or XLI in general,
Cat's really
or
strong.
yeah, CAT's, I mean, just making higher highs, higher lows. We have seen no signs of weakness in the space, and so I'm watching for these to give us pullbacks and breakouts. Deere is discounted, and I'm just waiting for it to try to play catch up because it's right to. I love your long-term view there, because that long-term support area,
Yeah.
if it can maintain, you can probably get 3% returns with a 6% safety margin on a short put on Deere. But it's an expensive stock, so you probably have to spread it. But there's some real opportunities in it. I just think you can't have Caterpillar ripping higher without Deere starting to get a lift at some point. As far as XLI and other just generic, I still would be looking at staying in some of the longer term positions.
Yeah. Yeah. Well, I mean,
Yeah,
let's talk about financials real quick too, because some
yeah,
pretty interesting action taking place there today. You've seen the sector up pretty nicely. You had JP Morgan earnings today. Let's see, they beat unsurprisingly.
all right.
Um, but yeah, they're off the lows. They did take out last week's low, but pretty good response here from this company that said they were going to be investing quite a bit of money into the U.S. I think Bank of America is showing some signs of life too. That looks good. Wells Fargo, I know, was kind of the winner of the day. Wells Fargo actually looks like a pretty good chart, if you ask me.
Yeah,
This,
this one's a tough one for me because if you
yeah,
ask me who I'd bet against in
yeah,
the
right,
financials,
yeah,
it'd be
yeah.
Wells
Just like
Fargo.
knowing what they do.
Yeah.
Yeah,
If this is a tough one for me to chase in, you have to go purely off the chart, because if I were to bet against a financial, JP Morgan, Morgan Stanley, any of these, Citi, um, I would bet against Wells Fargo.
yeah,
And so the fact that, earnings based, yes, gap up, close higher, but this being the situation, it's hard to bet against that.
Yeah.
My question is, again, if the consumer is strapped and we see a slowdown in the economy, how much lending is done? How do these banks make their money if we get leveraged up and we stop borrowing?
Yeah, well, that's why they're going to bring rates down. It's a throwing a towel, throwing a bone to the banks.
Yeah, could be.
And I think Goldman Sachs was kind of the loser of the day, but even they're coming back. How about
Yeah, and I
that?
bet against Goldman too. I'm like Don. I just like Goldman.
Yeah. In Italy, I don't really trade these big banks all that much, because me, I like those high flying names a little bit more.
Yeah.
But I mean, I'm not gonna lie, this Wells Fargo chart, I mean, this looks like a stock. I think you could see it go to like 110
Yeah.
pretty nicely. Yeah.
Yeah,
That's
like I said, I just from a fundamental, foundational, what their business is, I'd have a hard time chasing that one for a long-term play. So I'd have to be a breakout, hit a target, and step away. I couldn't let it run. It'd be
yeah.
a pure technical trade for me.
Well, that's what I like to make my trades on the most.
Mhm.
Sorry, I'm just giggling at the chat here a little bit. Anyways, let's take a look at crypto real quick and just see what's happening there. Bitcoin, interestingly, took out last week's low in the futures market, but Ethereum did not. Are we getting a little bit of a bid come through? It is coming through. So, where do you think we go from here in crypto, Blake?
You know what? I mean, I'm not a crypto person. I don't think it. So here's the difference in AI and crypto, in my opinion. AI, whether it's feeding money to each other or not, creates revenue. There's the
Yeah.
difference.
Right.
That's it.
Yeah.
Anything high flyer or not, crypto does not create revenue. And you take, Ether has the best revenue, if you want to call it that, but it's still not a real revenue based asset. So I don't see this holding up. I think that you just shook free the fear factor. You don't have the leverage, so therefore people that got clipped on this are not going to buy back in with full leverage, which means any momentum that you had to the upside is gone. People are going to deleverage out of this, whether or not they still buy it. It's going to be deleveraged, and so I just don't see anything but waiting for lower highs and to trade it again.
But is that lack of leverage a good thing though for like a trend sustainability?
Yes, but
Yeah.
it doesn't mean it's an uptrend.
No. Well, I mean, we still haven't made a lower yet.
Yeah. I'm saying that I don't think that necessarily will push it into a new uptrend. I think for me, it's going to be more that you can trust the movements better because it's not going to be as leveraged up and
Yeah.
it's not going to be as manipulated when you're not leveraged up as much. I think there will be a time that we don't have the super leverage. Now, obviously, you're in the crypto future space, which is 50 to 1 anyway. But
Yeah.
But as far as the way that they were trading on credit and those wallets and everything else that goes with it, that's gone. I think it's temporarily gone, but it'll come back. We forget, and then we can do it again.
Well, when you consider how many people were liquidated this close to the all-time highs,
Mhm.
I mean, blowing their accounts. I mean, you trade leverage markets. I trade leverage
Mhm.
markets. I trade on margin as well. I mean, even after Friday's sell-off, like I was saying this yesterday, did I lose money on Friday? Yeah, but I didn't come anywhere near to blowing up my account.
No.
You know what I mean? I mean, like if you're blowing your account after one day, like my friends, you're not trading, you are gambling, and that is a big
Yeah.
difference.
Yep.
And
And
that's what a lot of people do. But I think it's actually kind of sad in a way because like, is this what people think you need to do to like move up economically? Like you were talking about the struggles of the consumer earlier in this session, Blake, and it's like, is that what people have resorted to? Just searching for that golden ticket that doesn't exist?
well, and it's tricky because is it that or is it the desire for fame as well as
Yeah,
fortune?
yeah,
And so it becomes part of their identity. This is who I am,
yeah.
and and so
Lambrowski's.
yeah, and the gambling is part of that. I'm willing to risk it all, at least until they lose it all. Um, And so I don't know. I think that could have been enough to shake that out, and it changes the whole model. So, but yeah, it is sad, and it's gambling, and it's leveraged, and yes, they probably identified that's who they are, and so that really messes with their psyche. And I don't know I don't know if people will backfill into it, but
Yeah.
we'll see. Nature hates
Well,
a vacuum.
Yeah. Well, don't look now. We just turned positive on the day in the ES.
Yeah, we've erased it all the way back to 6,700 on the futures.
Yeah. Blake, was it a generational buying opportunity?
It's always a generational buying opportunity.
Honestly, we've been saying that for so long now. I forgot like how it even came about, but it still cracks me up.
I'm not. I just can't do it. Just can't do it.
Oh,
Same
Powell
thing with,
speaking. That's what's going on. Powell speaking.
there you go.
Start talking.
Yeah, create some directional movement. Fade it.
Yeah. Well, we'll see. I mean, let's see what the VIX is doing. The VIX is dropping some here, and I actually do. We were talking about gold and silver at the beginning. I kind of want to go full circle on this because
Okay.
this has been, you hear all this talk about, oh, stocks are in a bubble, crypto's in a bubble, but you don't hear people saying gold and silver in a bubble. I mean, could we be in a bubble in gold and silver? I mean, I'm going to ask that question. I don't think it's over, but might
Yeah, I
as
don't
well
think we're.
consider this.
I think we have upside still. But it's the way I always look at gold and silver is when you start seeing the conversation turn to like we did a couple of years ago, when everybody's saying, oh, you're not going to be able to get any of your cash out. You need to be buying actually gold and silver coins. And you see
Yeah.
people coin rolling and doing anything they can to get a hold of silver and gold. It's, the joke is always that you're going to run around with your little block of gold and a cheese grater and a pneumatic scale. I mean, that's ridiculous.
Yeah.
You're not, it's not reality. And I always tell people, say, if it came down to it, where that's all that has any value, it comes down to that. I have a sandwich, you have a brick of gold. I'm going to tell you that half of my sandwich costs a brick of gold.
Supply and demand, right?
Exactly. If you don't have food, I guarantee you that gold is not that exciting. And the fact is, that's kind of the chaos, the expectation, the post-dystopian society that people are betting on when they start buying physical gold aggressively and silver. So I think when you hit these new record highs and you see people buying physical gold at the highs, that to me tells us that we're in a super bubble. So
yeah. Well, so where do you have any targets on gold or silver to the upside?
Yes, I do. Let me pull up my other chart here, because it's actually holding up. Where is my chart? Holding up like I was thinking, and 4190, 4200, obviously that's an easy one for me as far as gold is concerned. But if we're going to break free, we have a move that should go about, what are we at? 42, because it's the year's distribution, the monkey bars here, 3970 to 30. I had that already here, but now I've deleted it. I'm looking for 4,500 really, 4,450.
Okay.
And that's by the end of the year. If we're gonna keep this momentum, that's by the end of the year.
It's insane.
But
It's
yeah. But right now
What
I'm
about
just looking at
silver?
4,200.
What about silver?
Silver just hasn't obviously done what we would expect. The pullback here is pretty dramatic, and so I'm looking just for the retest of 53. But then at that point, I'm looking for 60.
Yeah, I think silver could hit like $70 next year.
Yeah, I'm just talking by the end of this year. We could even
By
go
the end of, you think you
60s.
could
Yeah.
hit 60 by the end of the year? Wow.
Yes.
Wow.
Yeah.
I mean, at this
I'm
rate,
talking about 2.5
this has
turn
honestly
months.
exceeded my expectations. I mean, I came
Yeah.
into this year bullish metals, but I wasn't bullish enough, honestly.
Well, and if you've been watching my afternoon videos or even the long-term view, I keep saying buy the miners.
Oh, absolutely.
Because gold doesn't have to go any higher, and they're still at top margin.
Yeah, it's incredible.
Miners. Yeah.
I mean, look at silver miners. You still haven't even made a new all-time high yet.
Yeah. And so they're at peak margin they've ever had, and we're not there. That's crazy.
Yeah,
And if it
that
just
is
stays
something.
here, they just keep, every time they pull an ounce out of the ground, any time the ore comes out, they're making top margin.
So, kind of Brandon talks about this too. It's like you see like what the miners did like going into the peak of 2011 and how they just borrowed a bunch of money,
Mhm.
and became over leveraged. That's like the next signal we need to look for is once you see these mining companies going out and borrowing way too much money, just assuming the price of metals are going to go up,
Yeah.
infinitely. That's kind of your signal, but we're nowhere even near that yet. I mean, they're
No.
still coming out of like they're just printing money right now,
Yeah.
basically.
Yep. It's like when peak oil.
Yeah.
Same thing happened with the oil companies. They were borrowing and leveraging up and drilling as fast as they could,
Yeah.
fracking as much as they could, and they're printing money. But when they get that leverage, that's when everything pauses and it just breaks them under their own weight. So
I should have said mining money instead of printing money.
yeah, there we go.
Yeah. Yeah.
Yeah, no, I think that's, we're not there yet, so I think it's definitely worth hanging on to.
Well, Blake, we have about 2 minutes left. Any final thoughts, comments, ideas? What are you looking for here going into the end of the week?
I'm still doing like we said. I'm betting on industrials. I'm betting on the miners. I'm betting against and on consumer discretionary, or sorry, consumer staples like the Walmarts, Kroger's, et cetera. And then
Yeah.
I'm betting against leisure and hospitality and
Yeah.
casinos. And I just think that we're done. I just don't think we have the money anymore. And I don't think the future looks bright. And I think people are behaving that way, that the future is not bright for them. And so they're betting against it.
Yeah.
And so
Yeah.
I'm betting on the consumer, which is actually bearish. So,
Yeah.
and on
Well,
inflation. I just don't,
now
don't see
is
any
that
reason to step
another
away from
reason
that.
though? Yeah. I mean, I should have asked you this earlier. Could that be another reason to be bullish tech, like the great replacement, if you will?
Of the worker,
Yeah. I mean,
uh, at some point.
yeah. So
But
I don't know. There's a lot of moving parts.
I think we're bubbling in the AI. So I'm not
Yeah.
betting on it yet.
Yeah. Okay.
So
Well, we
yeah,
covered a lot of
anything you're
ground,
looking at
everyone.
outside of, we talked a breadth of things,
Yeah.
but
Well, let's
you
see.
didn't,
Let's see.
tell me
I like to
your
see
pick.
where we.
What's your pick?
My pick. I mean, I'm still on the. I like crypto into year end, mainly into November, and I still like the tech trade. I think we had a nice flush
Hmm.
on that, and if this market lives and dies by tech, so I think we're out of the great tech reset phase. I think there's another phase coming on that, and yeah, I mean, I scaled out of quantum. I did nibble a little bit back on them. Again, another one exceeding my expectations, trading very lightly, very nimbly in that sector. But for now it's working. It's all momentum, total bubble. I get it. The companies are garbage. Their headquarters are laundromats. They don't have
Hmm.
earnings. I agree. And it's not going to end well, but I'm not going to be the last one to leave the party. That I know. So that's
Yeah,
what gives me the confidence to approach
you
it.
don't need to be the first one to leave the party, but you definitely shouldn't be the last one, no matter what.
Exactly. So that's what gives me the confidence to approach it, basically. So that's what I'm up to still nowadays. But all right, Blake. Well, once again, a great session as always with you,
Well,
and
thanks
Brian's
for
good being
driving.
jumping on. Well, I'm happy to. And oh no, that's not. I thought we had that's the Don Kaufman co-host jumping in. I thought it was Brandon.
Is Brandon coming to take over?
Yes, it is Brandon's turn.
Ah,
Whenever he wants to jump in and join. But I guess I'll just pull up
hey, pull up the Aussie yen for me.
Aussie yen.
Yeah,
I know you like
because
to look at
you
that.
started about the yen. The Aussie yen is my greed fear indicator because
Yeah,
this is metals and leverage,
yeah, yeah.
short covered leverage. So just purely based off of this chart, are you bullish or bearish?
Well,
Forget what it is and just tell me what you think. What's the
oh, what I
trade?
think this chart is. What I think this chart.
What do you think of this chart? What's the trade?
Well, right now I'm going to lean in the bullish camp. But you close this gap, then that's the end of that story. So yeah, I mean, right now I lean bullish.
Okay, and then so this is the indicator I'd say you can buy all you want until
Yeah,
it
so you fill
reverses, and
that
then
gap.
and then you should be leaning short in equities and betting on volatility and against this move.
Yeah.
So
Yeah. I like it. Well, Brandon is in the house now, so
Great.
we will turn it over to Mr. Chapman. Brandon, how's it going today?
Good. Like a thief in a night, right? Just like breaking in the house, kicking in the door.
Yeah.
No,
Yeah,
coming
yeah,
quietly.
yeah.
I don't know.
Indeed. Indeed.
The Chapman house though is in disarray. We're putting flooring upstairs. I got banging and music.
Oh, I get it. I got 2 toddlers screaming all the time, so yeah, I understand. What's the difference?
I don't have any of that. So
Okay, so we're gonna start
right.
broadcasting from Blake's house then. Sounds
that's
good.
right.
That's right.
Okay, occasionally the dog will bark, but that's about it.
Yes. Okay. Well, I'm gonna
right,
see
have a good
Brandon, you are host, so I'll stop sharing and we'll get out of your way.
All right. Sounds good.
Thanks, guys.
See you guys. All right. Let's get rolling. We're talking risk.